Bitcoin Capital. Today we're speaking with Paolo Ardoino, the CEO of Tether and the CTO of Bitfinex and Bitfinex Securities, about his outlook for 2026. Some of the topics I want to discuss with Paolo today include, first and foremost, obviously price and the Bitcoin halving cycle. Paolo looks at gold, Tether Gold, and the role that hard assets play in Tether's portfolio. How the regulatory outlook has changed over the last 12 months and what to watch for the year going forward, and also which jurisdictions to watch. TradFi's interest in stablecoins and tokenization, and also what 2026 holds for Bitcoin Treasury companies. Paulo, welcome to the show.
Hey, Jesse, thank you for having me.
You bet. So the focus of this conversation is outlook for 2026. And I think what everyone's most concerned about is price. So I think the big question is, are the 4-year cycles over, or are they going to continue as they have before?
Right, that's a good question. So I think that there are different parameters and factors that we didn't have before. So, and last year was the first year that actually institutions started to join Bitcoin with the ETFs. I must say that I'm seeing Bitcoin still too much correlated to the capital markets, and there is something that could technically affect Bitcoin price in the next period. That is the so-called AI bubble. So this concern about the fact that AI companies are spending too much money in AI infrastructure and data centers and trying to build a gazillion gigawatts of power and installing GPUs and all that, right? So if there is a sentiment shift in the AI world that could cause some turmoil into the stock market in the United States, Bitcoin could be affected. So that there is that, I would say. But I think more and more there will be funds and even pension funds and governments that are very interested now to Bitcoin. So I think that there will be a base supporting force for the price that I think was not present before. So I would imagine that sharp corrections of 80%, like we saw in 2022 or early 2018, might not be anymore the case. I think.
Yeah, I think that makes sense. On the other side of it too, the block reward is much smaller than it's been previously. So I think the selling from the miners should have less impact and is a lot smaller than what you see coming in from the ETF flows as well.
I personally don't think that matters too much. The sale of the mining output as a sell pressure. I mean, we have seen recently big accounts with tens of thousands of Bitcoin dumping the market, and and also even old accounts being reactivated. I think we are in a stage where the more the time will pass, the liquidity will grow. I was reading that now in the US, CFTC-enabled markets can list Bitcoin spot products. So that is something that definitely is continue to bring Bitcoin eventually, and over time at the same level of gold, being gold basically the top 3 most liquid market, most traded market in the world. And so the more the price, without being a financial advice, but I think that over time the price will go up and the liquidity will become grow tenfold and so yeah, I think there will be eventually the coupling. Just now, still like with $2 trillion of market cap, Bitcoin is still too volatile because of that, right? So the market cap is too little in a certain sense to be stable.
Yeah, the last cycle, like speaking of gold, I think that was kind of the thesis for a lot of the investors was like Paul Tudor Jones had that line that he says Bitcoin was the fastest horse. It was like gold, but would move faster. And then I remember JP Morgan had this really great title to a note. They said that Bitcoin would make gold suffer for years. And now gold is making Bitcoin suffer, right? So gold is outperforming Bitcoin this year. Why is gold's performance better than Bitcoin this year, do you think?
Well, I think that both the assets are hedging assets. So people for the last 5,000 years held the gold as a hedge against, well, first as money, and then more recently had a hedge against national currencies and inflation and the poor decisions of central banks. Bitcoin is considered basically digital gold, and technically should be for many preferable to gold. But the reality is that if we look around the world, only still a small portion of the world understands Bitcoin. More education is needed. Gold had a first mover advantage and is stayed with us for 5,000 years. And so the knowledge of gold has been narrated across generations. We need multiple generations to understand Bitcoin at the same level of gold and have that intrinsic test of time trust that now is normal and normally attributed to gold. So I would say that simply put, we are the young people. If in the next few years there was a financial reset, people would still prefer gold because people understand more easily gold. In 2 generations, maybe 1 generation is hard to tell, or in 3, 4, it's very hard to tell. I think that people will prefer Bitcoin. So it's like most of the decision makers in the world are above 50 years old. And so and there is, usually you are less prone to change, and not everyone, right? There are great people that like to read and find and understand always new things and get excited about the novel technology. But the reality is that most of the people that are in this moment are ruling the world and controlling wealth and taking decisions are not necessarily yet convinced by Bitcoin. And so, but they know gold very well. There is the Italian Prime Minister Giorgia Meloni. It was like news of this week. Is trying to get, I think, the how much? Well, few. Well, most of the gold that Italy had outside of Italy, stored outside of Italy, she's trying to repatriate it, right? So it shows that there is someone and government are starting to brace for something, and the way they do it, for example, many Asian countries are buying large quantities of gold as well, right? If there is in this moment there is a fear of global instability, and the clear winner for protecting from that is gold, but eventually will be Bitcoin.
Yeah, speaking of countries buying a lot of Bitcoin, I saw a chart last week that showed that Tether bought more Bitcoin in the third quarter than any central bank in the world, and more than both India and China combined, which is an
You
amazing
mean
stat.
gold,
More
not
gold, sorry,
Bitcoin?
more gold, more gold. Yeah, more gold.
Yes,
Yeah,
yes.
but and then a lot of people were sending me messages like, "Oh, it looks like gold is the new Bitcoin," things like that. But Tether also bought a lot of Bitcoin too. Actually, bought more Bitcoin in third quarter than gold, which I don't think is as well reported. Is that correct?
So we bought 8,888.88 Bitcoin in the last quarter. We are buying both, and we think for this very reason, right? So the motto of Tether is being the stable company. And so stability, we need to be intelligent about it, right? So I prefer personally Bitcoin, but since we want to bring stability to the world, we cannot look at the world as we wish it was. We should look at the world as actually it is. So we need to, um, if we need to protect our users from, and we need to create a hedge for our users, we need to do it in a way that is historically correct to this exact moment in time. And this moment in time, as I said, still sees gold as an important hedge. That's why if there are market turmoils, in fact, gold goes up, and Bitcoin, unfortunately, is still tied to the stock market, and eventually can untie itself from the stock market. But again, it's not like we are choosing between two children and we are saying, oh, I love this one more than the other. No, it's like our major goal is to protect our users, and we're trying to do it in the smartest way possible and in the safest way possible. And both assets are very important for this endeavor.
So you see the role in the portfolio is kind of like a hedging tool.
Yes, I think there is. I sometimes I there's this chart, right, that shows on the there's the chart of the comparison of dollar and against all the other fiat currencies. So we know that, you know, we say that the US dollar is there is a lot of printing going on, and in basically there are between 2 and 3 trillion per year being printed in US dollars. But think about that is the best fiat currency out there. Well, if you remove the Swiss franc, but the Swiss franc is too small. And so imagine all the others, right? So if you look at the chart of if you put like on a flat line the US dollar in a chart and you draw all the other national currencies, you see basically the Argentinian peso lost 94.5% against the US dollar in the last 5 years. The Venezuelan bolivar lost 99.8% of its value against the dollar in the last 5 years. And then like the Turkish lira, 81.5%. So that is, and someone told me, oh well, but the Venezuelan bolivar cannot go farther down. Well, actually, from 99.8%, you can still lose another 99.8%. So yeah, so and there is no sign of recovery from there. And so, and of course, if you add Bitcoin and gold on that chart, it's like then also the US dollar start to appear weak. But see, the problem is like you have to look at the world as exactly as it is, not as not with this utopia that in mind that sometimes we like to have. Also, myself, I like to have, and I try to work for we as people at Tether and Bitfinex, we try to work to build the world as we want it to be, but also at the same time we are fully aware as of the world as it is today, and so we are hedging against the world as it is today while we're trying to build the world that we wish our children will have.
And if you look at Bitcoin and gold, I mean, the old chart, when we used to have the old Bitcoin versus gold debates, that gold would lose on things like divisibility, portability, verifiability. We had that clip recently of Peter Schiff and CZ where he gave him the bar of gold and said, can you verify that this is gold? And then accessibility. But tokenized gold obviously improves gold on a lot of those metrics, right? So I think some people have described Tether as kind of a distribution mechanism or network for T-bills or for US dollars. Do you think that XAUT, Tether Gold, can do the same thing for gold? Can it act as like this big distribution network and get gold in a better form out to more users?
What Tether built over the last years is the biggest and widest monetary distribution network that humanity ever seen. Was started from the US dollar, and well, we tried it with the euro, but the reality is that no one wants the euro, so it failed miserably. But then we are seeing a huge demand for gold, tokenized gold, and XOT. So the market cap of XOT doubled in the last 3 months. The demand is huge, both from the institution side and and the retail side. So, for example, there is a US institution well, actually, a US listed company that bought $150 million worth of XRT in the last couple of months. And we have a huge demand from other listed companies to start adding Tether Gold in their portfolio. And on the other side, there is a huge demand of tokenized gold and XOT coming from South America and Southeast Asia. And so we are seeing this demand. So institution and retail going together, and that is making XLT in this moment very successful. And we think that we are just at the beginning, right? For the first few years of USDT, no one cared about USDT. Between 2014 and 2017, like early 2017, really no one really cared or understood USDT. But then, slowly, then suddenly it beated every single expectation. And I believe that the same will apply to XLT. There is, in a certain way, I could see how the US dollar could be the checking account, and Bitcoin and XLT would be the savings account. And I think it's smart for people to, again, look at the world as it is today, rather than not at the world as they wish it would be when they think about their savings accounts, right? So it's always important to be pragmatic and not be too biased to a single position. And although again, Tether is making so much more for Bitcoin in terms of education than what it does for USDT or XLT. The reality is that, again, we face ourselves, we not the pushback that we get, but still we face the complexity of still a small portion of the world understanding Bitcoin. So much more education should be done and will be done, but generations need to change.
Yeah, no, that's a good argument, the demographic argument for Bitcoin and for tokenized assets and for a lot of the stuff that we do. 21 is set to go live soon. I don't know how much you can talk about it, but what do you think the outlook is for Treasury companies given this recent price wobble? Some of them have kind of fallen under pressure here in the last couple of weeks.
Don't put me in trouble. I can, I can, I need to be very.
We're talking about Treasury companies very broadly.
Yes, treasury companies. So the problem is, like, I'm not very bullish on treasury companies that are just treasury companies. I think that you want a treasury company to have an amazing operational business and to be the aim for 21 is for 21 to be an amazing Bitcoin company that provides Bitcoin services and also has a Bitcoin treasury, a very important big Bitcoin treasury. So that is, I don't think we should focus with 21 on financial engineering, but we should focus on something that is very sustainable and is profitable and is successful, and build an amazing business. So that is, in my opinion, the right way to do it. I mean, I think strategy and Michael Saylor did history and created history. He produced so much innovation with strategy, but I think that is normal for 21 and for other treasury companies to look at what he created, maybe take some ideas, but at the same time try to improve or differentiate. And that's, I think, what Jack Mallers is doing with 21. He's doing a very fantastic job, I must say.
And just one kind of question specific to 21, the last one. Will the Bitcoin operational activities, are those activities what will generate the funding to buy more Bitcoin, or will that funding come from another source, or how does that work?
Well, the idea is to build products or acquire products that will generate a good cash flow that is not tied to the Bitcoin price, or to it's you want basically a business that is viable at any times and also can allow you to that will allow you to purchase Bitcoin. At the same time, it does not mean that 21 should stop issuing new shares, for example, and continue to do, to buy, to try to expand its Bitcoin treasury. But you don't want that to be the only driving force.
Yeah, one of the structural questions I kind of wanted to ask you about what's changed over the last maybe 12 months or so is I think over the last maybe decade or so, you could make the argument that regulators and policymakers and traditional finance have maybe influenced the digital asset industry more than we've influenced them. And I think there's some signs that that's reversing. Maybe the Genius Act, there's a lot more interest in stable coins, there's interest in tokenization. And I think that maybe there's signs that that's starting to reverse, and our industry is starting to impact them. Do you agree with that? Do you think that we're starting to make some impact within the traditional finance? And what are maybe some of the structural changes that you've seen around tokenization and stablecoins over the last 12 months and maybe going forward into the next year?
I think that so there are pros and cons in what I see. So I think tokenization and tokenized securities and tokenized commodities are going to be massive. So that's why I'm very bullish for Bitfinex securities. It's something that I think is going to provide unprecedented access to both companies that want to raise capital or tokenize their shares, but at the same time, it will provide a new form of access, much more democratic access to the buy side. So that's something that I think every government should look at. I know that many governments are looking at this opportunity and they want to be leaders. From El Salvador to Kazakhstan, also to Middle East countries, they are seeing like opportunities to tokenize portfolios of real estate or their refineries, or simply give opportunity to smaller companies that never had access to the financial markets to raise capital. So there is so much opportunity there. On the only downside of the huge interest now from that, you're right. We are now at a point where there is some sort of influence from our industry into institutions and regulators. The only downside I see is like Bitcoin is for Bitcoin, right? You don't want 99% of the Bitcoin being institutionalized.
Yeah, 100%. Yeah, I think. Well, how do you think that plays out? Because I think previously the Venn diagram was kind of separate. Like we had our world, and then TradFi had their world. But now that the Venn diagram is kind of to merge over, is it they're interested in our business? They want to do stable coins. They want to do tokenized securities. I think in some ways we're interested in their business. Also, we want to do tokenized securities as well. How does that play out? Like, is it ultimately going to be a battle between old finance and new finance? And who do you think will win that if that is a battle?
I don't think will be a battle. I think will be convergence. I think that, probably crypto firms started to trying to expand into traditional businesses before actually traditional businesses started to expand to crypto. So because already from 2020, tokenization opportunities started to rise. The idea of using blockchain for solving institutional use cases. There were many startups born around this mode. I think there will be just convergence. I think the small players will be integrated, will be bought by big traditional firms that wants to bootstrap and leapfrog the time lost in trying to dismiss and hate and trying to kill this technology. And then now that, of course, it's the Genius Act passed, they understand that they lost a lot of time, and so they want to actually acquire talent, and so they are going to buy all the small players from the digital asset world, and the behemoths of the digital asset world will just trying to acquire maybe small banks and the small financial institutions, small regulated institutions, so that can at least start to compete at a broader level and cross sell to their user base new products.
Yeah, and so that's on the regulatory side. You touched on some of the jurisdictions that were in El Salvador and the AIFC in Kazakhstan, and the Middle East, ADGM, and other places. The US, I guess, has improved a lot this year, but it looks like the rest of the G7 is maybe a little bit slow to follow. Do you see any signs of change in some of the big economies?
I mean, there is in the G7 there are some European countries, and I'm very bearish on Europe. I think that Europe will remain always the um, last wheel of the cart whenever we talk about innovation. It's Europe is trying to regulate something that they don't understand yet. That is very sad. It's not happening only in digital assets and blockchain space, but also happens on the AI space and so on. So yeah, it's as an European, I of course it pains my heart to see that.
Well, I'm
But it is
Canadian. I
what it
feel the
is.
same way.
Yeah, also Canada is kind
Canada's
of a one
arguably
kind of
worse because we're following Europe.
yeah, yeah. You know that yeah, there is that, and I think in Canada you can trade like 3.5 assets probably, you know, and if you have more than two chewed olives of digital assets, then you must be a criminal, right?
That's
So
right.
yeah,
Yeah. And then the government
yeah,
wants 70% capital gains. Yep.
yes. So in Italy is now I think is 42%, or will be in 42% next year on capital gains on crypto. Of course, if you see basically in Italy is like you know, it shows that the banking lobby is very strong. You have so if you hold an ETF, a Bitcoin ETF, then your capital gain is 26%. But if you buy Bitcoin and your capital gain directly is like physical Bitcoin, your capital gain is going to be 42 or something like that. So they want to disincentivize a direct ownership of Bitcoin. That is very sad, I would say. They want to disincentivize freedom. So that is basically boils down to that. They want to make sure that they can control people. If too many people were using Bitcoin, you know, it would be very hard for government to control them. And so if instead all their wealth is in fact tied and centralized into the hands of a couple of banks in Italy, people would be much more controllable. Yeah.
So, what about outside the big economies? Like, what are the opportunities that you see amongst the mid-size and smaller economies, and what role do you think they have to play in the kind of regulatory landscape?
I think boutique countries are going to be the countries of the future. They are more flexible, both on the crypto side, on AI side. They can decide very quickly to devote more resources to the world that is changing. El Salvador is a great example. There are other countries for example, in CIS region like Georgia, that are doing great advancements on the digital asset side, the stable coins laws, and so I think there will be, you know, for big countries. They will find a hard time to get anything done at the government level, and so institutions in these countries will be always on the sidelines. Small countries, the ability again, they are more flexible. So I'm much more bullish on the small countries and boutique countries.
Yeah. Also, the interesting thing is those smaller countries also have a lot better demographics. Like, if you go to Kazakhstan or kind of the Central Asian countries, they all have like lots of young people, young families. I think El Salvador is the same way too. And then Europe and Canada and most of the more mature economies have and Asia has just horrible demographics.
Absolutely. So the one of the main common denominators of the emerging markets is that there is more youth. Again, I'm not always to shoot at Italy, but Italy is a good example of a country that also its population is dying. I think the number of kids per couple is 1.3. That is very well below the average, the world average, and also the threshold for the sustainability of country, right? But that is also true in many of the Western countries there that they make simply less kids. So yeah, I think maybe going back to our original point, it's kind of tricky, right? Because what I said is that we need generations and change generations and younger crowd to understand Bitcoin, so that Bitcoin can eventually become truly the new gold. But at the same time, those exact countries are the countries that are buying more gold in the world, right? So India it's been said that India, between the jewelry of people in India, there is more gold than anywhere else in the world, right? And they will keep buying gold. So it's kind of tricky. So it's a dynamic that is hard to predict. But I think that anyway, new generations will understand gold better than the old generations. That is just normal.
What about sovereign adoption? I mean, I feel like that's one of the narratives that didn't really play out as expected this year. I think at the start of the year, we were really optimistic that there'd be a lot more countries that would follow in El Salvador's footsteps. Is there anyone else out there? Like, what do you think? Do you think maybe that could be a theme for 2026 to see more sovereign adoption and more governments moving in that direction? Are there more El Salvadors on the horizon?
Well, the issue is that let's talk about again incentives, right? So if you are a country, El Salvador is the perfect country. El Salvador does not have a national currency. Is fully dollarized, and so they can, as the US dollar is not their national currency, well, is their official currency, but is not that they print it. For them, adopting any other currency in the world is not difficult. They don't have anything to lose, let's say. But for a country that instead is printing its own currency, this country would never have the incentive to create or adopt a more popular currency that they cannot control and they cannot print at will.
So, but I'm sure on the mining side, there must be tons of smaller economies. Like Bhutan was one that came out last year or the year before. I'm sure there's tons of others that are resource rich and capital poor that have been quietly mining Bitcoin for years. So there's probably lots of those out there.
Yeah, but you said it, right? So the problem is that you want a country that is resource rich and rich. So otherwise, like you are resource rich and capital poor, then you need a lot of money to do Bitcoin mining, right? So in a certain way, I think Saudis and general Middle East are devoting a lot of resources to Bitcoin mining because they are rich and rich, right? So they are resource rich and at the same time they are capital rich, so they can mine their own Bitcoin. And also, I think that in a certain way, like Tether is also a gigantic Bitcoin miner. The reason why, there is always this choice that you have to make. The reason why we as Tether are mining Bitcoin is not because we want to. We think that it's not that we think that is the most efficient way to obtain Bitcoin. If you had $1 million, I'm going to be shocked for this, but if you have $1 million, you always, most of the time, I would say 90+% of the time, you would make more money if you were buying Bitcoin rather than mining Bitcoin, because you don't have an OPEX. When you buy Bitcoin, you have a lot of troubles when you mine Bitcoin. But in the end, if you have enough Bitcoin, you have the incentive to be willing to participate to the security of the network. So if a country would acquire a lot of Bitcoin, they want to make sure that can mine their own blocks, because that's the beauty of the game theory, right? So when you apply to a country level or a huge corporate level, because you want to make sure that you can include whatever transactions you can in your block, so you will never be excluded from the Bitcoin ecosystem.
All right. Well, I want to be respectful of your time here, Paulo. We're coming up on time, but is there anything I've missed? Like, what else do you think? What else are you really focused on going into 2026?
I think we are going to see. I mean, governments will slowly. I don't think 2026 will be necessarily a game changer year for when it comes to particular regulations or adoption. I think will be a good, quiet, solid consolidation year, and that's, I think, what we need. Right? It cannot be every single day new hype, right? So we need sometimes years where people keep their head down and build new stuff, and they stop looking at the price.
I wanted to end it more optimistically.
I'm very optimistic.
Okay. Long-term optimistic, short-term, put your head down and do some work. Okay. Okay. Thanks a lot, Paul. I appreciate your time today.
Thanks, Jesse.